Hi, welcome back to Kairos Talents Trading, where trading meets faith. If you haven't met me already, my name's Courtney, a Christian forex trader with 8 years experience, and I talk about how faith affects my trading and they work together. Today I want to talk about something really specific that helped me to break through to profitability, and it was going from the lower time frames to the higher time frames. Stick around in this video because we're going to get into some charts and I'll show you a little bit about the technicals and how I trade. And if you're enjoying the content, don't forget to hit like and subscribe. Let's get into it. The first thing I want to say is that the style that you trade in is going to be specific to you. So there is no right or wrong way to trade. This is about self-discovery and understanding your temperament, understanding your character, the way you think. So for me, I went through a long journey of understanding that actually the higher time frames work better for me as a trader. But trading the lower time frames was an interesting journey. About 4 years in, I went through this intense period where I went from trading higher time frames, so used to trading the daily, the 4 hour, the 1 hour, and someone introduced to me trading on the lower time frames. And so I went through this period of sitting on the 1 minute all day long from London open all the way to London close, and it was exhausting, man. I was taking more trades, and in my head I think I just equated more trades with more profit, and it just wasn't the case for me. I was over trading, I was stressed, I was inconsistent, I was burnt out, and I also created this fear of being away from the charts. Think about it, you take a 60-minute candle, and in that 60 minutes you've now got 60 individual candles that you're reading into. So it's intense. Trading takes a lot anyway. It's quite an emotional and mentally draining activity. So to sit all day and do that, it was difficult, but I actually did learn a lot from that period. However, I got to the point where I had to realize and take a step back and say to myself, this isn't really working, you're not profitable, and you're not confident in your edge. Do you even have an edge? I was in this boom and bust cycle. So I stepped back and I said, you know how to trade, but you don't really have an edge. We have to go back to the drawing board. And I don't know if you've ever been there or you're there right now. Sometimes there comes a period in trading where you just have to adapt. You have to change things because it might not be working. And again, that doesn't mean system hopping, but it means discovering what's going to work for you and move you in the right direction. So I went back to reading books, listened to profitable traders in market wizards and podcasts. And there was a common theme: support and resistance and higher time frames. And I knew how to trade the higher time frames because that's how I used to trade in the past. And once I went back to looking at price on higher time frames, realizing that that's actually how the big money move money, because they have such an amount of money to move. They're not trading millions, they're trading hundreds of millions and even billions of dollars. You can't do that on the 1 minute. That has to be done on weekly and monthly time frames. So when you're following that perspective, you get a different perspective on how price actually moves. I also realized that trading the lower time frames without a higher time frame perspective can often give false signals, and it created within me emotional decision making and overexposure. So once I stepped back and I reassessed, it gave me a bit of a clean slate to go again. There's a verse in the Bible that I want to share which comes to mind. It's in Proverbs chapter 19:2, and it says, "Desire without knowledge is not good, and whoever makes haste with his feet misses his way." So what does this mean and how does it relate to trading for me? Well, it means desire, which is me being on the lower time frames, trying to take more trades, trying to bank more wins, thinking that my P&L will increase, without knowledge, without any understanding of what's actually happening in terms of market direction, without reading the higher time frames. It just means that I'm being hasty. I'm not getting a full picture of what's going on. Once I understood that the lower time frames can indeed be useful, but it's the higher time frames that dictate overall direction, it just helped me to look at things from a different perspective. There's a couple of trades that I want to get into, so let's look at the charts. As an example, I'll be using pound dollar, a couple of trades that I took during the second week of March. First thing I'm looking for is a higher time frame level of support or resistance. In this case, it will be support, and I'm on the daily, and this is pretty telling. there are rejection wicks showing that price doesn't really want to move any lower. That's 1, 2, 3, 4, 5, 6 in a row before price then shoots up here and breaks resistance here and here. This is a monthly level, and the monthly levels are always offer some sort of support and resistance. So the fact that was broken as well was a sign to me to be looking for buys. So this is the 4 hour. Can see that there is a change of character that originates from support here. Bullish change of character that breaks structure, again breaks this monthly level here, and I'm looking for some sort of pullback to this zone, which has changed from resistance now to support. And if I zoom into the 1 hour, this is where I was looking to enter. So the fact of the matter is the monthly level has been broken. I was gauging an entry using this range here, Thursday, so I'd have been gauging there. You'll probably wonder why I wouldn't have set my entry there. That's because it's 7 in the evening and I don't trade after a certain time. After 5 o'clock, I'm not looking to trade because liquidity starts to diminish. But the next morning, as price moved up here and started to move back down, that's where I was gauging my entry. So here into this retracement level, the 70 to 79 retracement level, I've also got the support level, more support. And this is the benefit of using the higher time frames, right? I'm looking at levels that are being respected on the higher time frames. So I was tagged in London Open 8 o'clock, and price, when I see wicks at the level that I'm entering, that's a good sign. And if I play price forward, price originally did move up. That's where I was looking to remove risk, not too early, because I know price can just bounce off that level, meander around here, move up, move down, move up again. So I didn't want to be reducing or removing my risk too early out of fear. But if I play it forward, see that again, price did move up, moved around, and eventually just broke lower. So I was tagged out for a loss here. But now the key is that on the higher time frames, I'm now able to see that, right, okay, this monthly level has been respected. It tried to break above, but wasn't able to. Broke down here, moved back up. This is a lower high now. And then, again, tried to move back up, made another lower high. And eventually what happens is price collapses, breaks this level, breaks structure here, breaks this level here, which was support, comes down, breaks that level, and now support just turns into resistance. But these are all higher time frame levels. So once the higher time frame levels break, they are much more likely to be respected. So now I've changed my bias towards the end of the week. It's now Thursday. And if I play this forward, I'm looking for any kind of pullback. So as I can see, price begins to pull back, and I'm now looking, because the higher time frames have changed, I am changing with the higher time frames. I'm gauging my entry in and around here. And this would have been the following day I was tagged out. And I'm now going short, so I'm looking for an entry in here around London Open originally. Play that forward, and it wasn't until 11 o'clock, so just after the London Open, pre-New York, tagged in there. And I like to see this wick when I'm tagged in. Obviously you don't always get that, but it's a good sign when I see a rejection wick that I'm trading in the right place. Again, the retracement level that I'm looking for is between 70 and 79% retracement level. And I've got an intraday resistance level that I'm hoping is respected because price has broken down and is now retesting as resistance. So if I play this forward, I'm now in the trade, play it forward. Here, take profit at that low. For two reasons. One, I like to take profit quite early because this is a low and price could easily sweep here, bounce in support, and then just move back up. But now I've taken profit, I've taken half the position off. And it means that I can manage the rest of the position knowing that I'm already a winner. This allows me to trade with, I guess, less attachment to the position. So again, if I play this forward, and let's not forget I'm trading with a higher time frame bias. So I'm looking at the next higher time frame level, which is this support level in here, and this higher time frame low here, this is where I'm looking for my next target. So if I play this forward, you'll see that price did eventually on Friday during London Open absolutely crash through this level. I didn't have an automatic TP set for that reason, because price can just keep on going like it did here, and I'm able to manage because I'm less attached to the trade because I've already taken profit up here. So what I did do is I went down to the 15-minute time frame and I set a trailing stop. So let's move this down. I set a trailing stop where there would have been some sort of wicks at this level here, knowing that price could easily just move back up at that support level, and that's where I trailed. So as price moved up here, that's when I was taken out. And I know that price can easily test this support level and just flick back up, which it did. And that's the benefit of using higher time frame levels and high time frame price action, is that these levels are respected a lot more than the lower time frames. So I'm able to see what's going on the charts. So there it is, a quick example of how I use the higher time frames to read price and how I trade now. Once I understood that it's not about taking more trades, it's about seeing with more clarity and understanding direction, which is usually dictated by the higher time frames, it really helped me to flick a switch in my mind, and that's when I became profitable. It really is now a case for me where less is more. I take a lot less trades, but with a lot higher quality. If you found this video useful, give it a thumbs up, and don't forget to subscribe. Leave a comment below with your biggest takeaway from this video, and I appreciate the support, guys. And until next week, don't forget, all glory to God, and I'll see you next time.